Friday, January 22nd, 2021, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at why gold is money, because it is a dead asset, because it isn't consumed as most other commodities or all other commodities, maybe with the exception of silver, which is a hybrid. And why am I talking about this? Well, there's a lot of debate, of course, between Bitcoin and gold. Yesterday, I watched a video, an interview by Daniela Camboni of Stansberry Research. She interviewed a guy actually I'd never heard of before, Michael Saylor. And one of my viewers contacted me yesterday and said, well, this guy, Michael Saylor, he's talking about Bitcoin. What do you think? So I listened to the interview, and his arguments seem very convincing. And he's an engineer, apparently, and he's into technology. And he uses the point that man has gone from riding horses to driving cars, Model T car, all the evolution of technology. And he assumes that with money it's going to be the same, even though gold has been money, and silver as well, for thousands of years. But yeah, one of his arguments is that Bitcoin travels at the speed of light. Well, I've never transferred Bitcoin that quickly. Maybe in the old days when Bitcoin was around $100 and I was dealing with Bitcoin at that time, at that level, it was quicker. But nowadays it can take hours depending on how the network is operating at that time. That's the other thing he talks about. It's a monetary network. Why is it monetary, though? Is there real value in people doing calculations on a computer network? And yes, I would say that virtually Bitcoin does match all the qualities of gold, but it's virtually. I've said before, let's say I'm a golfer, right? So one of the golf courses that I really liked and I've played before many years ago is Pebble Beach. But right now I can't travel there because of the lockdowns in the UK. And even when there aren't lockdowns, it's an expensive course to play on. It's very far away. So EA Sports develops, let's say, a game, and you can play Pebble Beach. It looks perfect. You can choose what kind of weather conditions you're gonna play with. You can choose the tee you're gonna play from, and it's perfect. It's even better than the course, right? But it's not the real thing, and that's what I would say about Bitcoin. And I see here that Michael Saylor has done some other, well, there's some more information on him on YouTube. There's this website, Crypto, says Michael Saylor finally reveals his 15 million Bitcoin prediction. Well, that's the other point about money. Money has to be a stable store of value. And why is that? Well, because even though there's nothing wrong about hoarding things, in my opinion, if the monetary asset keeps going up in value, it's very hard to lend it. So it will not serve as money, because money a lot of times is lent into the system. Some people might argue that gold is volatile. Yes, but only because our current monetary system, since Bretton Woods was dismantled by President Nixon in '71, has been very inflationary, i.e. the governments and central banks have issued a lot of fiat currency. So over time, yes, it looks like gold is very volatile. There are periods where gold or the fiat currency drops massively. Well, that's the escape valve for the inflation that they've created. But as you can see here from this chart, since 1971, gold has steadily risen and been a perfect protection for the inflation of the monetary system. I have a feeling we're going to have another blow off in gold because the monetary authorities, governments are continuing to inflate. And Michael Saylor said yesterday, well, Bitcoin went up, I don't know, 300, 400%. Gold, well, he actually got gold wrong. He said gold went up 15%, but it actually went up 25%. I know it's not as much as Bitcoin. And he said, well, gold is proven not to be a hedge against inflation. Well, I would not be premature, Mr. Saylor. In the period since 2008, gold is lent into the system. The very wealthy who hold gold, they lend gold. It's called the gold lease market, and it's actually based in London, in the LBMA. I'm sure there's a lot of leasing going on as well. And the LBMA doesn't mean it's just traded in London. All the major international banks on Wall Street, London, Frankfurt, they all lease gold, and they get a lease rate. So gold is, yes, it is dead money, but it can also be lent. And I don't know if you guys heard of the carry trade. Well, the Japanese yen carry trade. And what is that? Well, that's the Bank of Japan and the Japanese government trying to keep the yen depressed, trying to manipulate the yen lower because they want to export more, because Japan has been in, their economy hasn't really done much in the last 30 years. So what they do is that they carry on policies like QE, negative rates, and what that does, that encourages market participants to short the yen. And when you short something, you're actually lending it out. And there is a danger, of course, if the yen appreciates, that they have to cover that short, because when you borrow an asset, let's say through a mortgage, through a currency transaction, if that asset goes up and you're earning income from an asset that's going down, it's going to be very hard to pay that loan back. And and that's why we've had the yen carry trade, because the Japanese government is guaranteed almost that they're going to try to keep the yen low. So people borrowing in yen, and they take that to buy other assets. So if Bitcoin is going to go to 15 million, how is it going to be money, Mr. Saylor? How are people going to be financing projects if it's going to replace fiat currency? If, as you say, gold is going to disappear, how is the economy going to be financed? There's another example of this a few years ago, or maybe more than a decade, in Eastern Europe, I think in the Czech Republic or some other countries. People were borrowing their mortgages in Swiss francs. And why do they do that? Well, because rates in Switzerland are very low. But then the Swiss franc started appreciating, and these borrowers got really destroyed. So that's the other question we have to ask. How will Bitcoin as money finance the economy if it's not stable? And you might argue, yes, but gold, look at gold. It went from 35 to almost 1,000 from 71 to 1980. Yes, it did. But if you look at the final push from 400 to almost 900, it took a few months from the end of 79 to 1980. And I think we're going to have the same kind of move next in gold. And what that will do, of course, all the people who have leased out their gold or shorted, they're going to have to cover all their gold. and that's what will happen. But over time, gold is money. Gold is lent out. So let's see if Mr. Saylor is going to be right. Let's see if gold is really finished. And let's see. He always talks about Bitcoin being digital gold. And I don't know if you noticed, a lot of times when you read about Bitcoin in an article or you watch a video, the thumbnail or the pictures, is a gold coin. Why is that? Well, yeah, why is that? That's the question, isn't it? Well, because gold is money and they know it. So, and I'm not arguing that Bitcoin might not go to 100,000 or 50,000 or down back to 10,000, and it's volatile. And I don't see why, how volatility makes something good, really. Money is supposed to be a stable store of value. You need to know, businesses need to know the value of money will hold up, or else they won't be able to start new projects. And that's what gold does. Gold and silver have always been money, and in my opinion, they will always be. Bitcoin, I'm not too sure about it. Well, even Milton Friedman in the early 70s, when the Bretton Woods system collapsed, said that gold was going to be of no use anymore, that we could have a scientific, we could emulate gold through the fiat currency system, through controlling the supply of the fiat currency. But we've seen that that has ended in disaster, of course. You could also argue with technology, you could argue that paper money would have completely destroyed gold, that because it's much easier to circulate and to carry. You can have a banknote saying $10 million, and it's really easy to transport. And that's Mr. Saylor's argument. I just wanted to talk about a few things that Murray Rothbard, in his book, What Has Government Done to Our Money, says about the supply of gold, because a lot of people say that the supply of Bitcoin is limited to 21 million. And by the way, why 21 million? And who really decided that? Well, we're told that it's Satoshi Nakamoto. Well, Mr. Nakamoto, why don't you come out in public? Why don't you make yourself known? I like to know who I'm dealing with. And the excuse in the old days, I remember really well, was that Satoshi Nakamoto was scared of being maybe suicided or something like that by the powers that be. But now that Wall Street and everyone really is adopting Bitcoin or planning to adopt Bitcoin, why can't you come out? But anyway, yeah, they say that the supply of gold is unlimited, but that might be true over time. But have you watched the Gold Rush programs on the History Channel to see how difficult it is to extract gold? Yes, and I know people say that we'll be able to extract gold from space, but I think we're still far away from that. And even if we could, it would be really expensive to do that. So this is what Rothbard says about the gold stock. He says, changes in the total gold stock will be governed by the same causes as changes in other goods. Increases will stem from greater production from mines, decreases from being used up in wear and tear in industry, etc. Because the market will choose a durable commodity as money, and because money is not used up at the rate of other commodities, but is employed as a medium of exchange, the proportion of new annual production to its total stock will tend to be quite small. Changes in total gold stock then generally take place very slowly. That's the old stock to flow ratio. Yeah, and the other point he makes, and I kind of disagree with him about wealth. He seems to think people can put all their wealth into Bitcoin and that it will be easy to transport. He seems to say that, to think that you shouldn't have your wealth in real things because government can confiscate it, but somehow government can't confiscate Bitcoin. I don't really think money is wealth. And even though I hold gold, I hold it because right now I think assets are very undervalued, the real assets, and I'm waiting for when paper assets collapse. I think he's got the definition of wealth really kind of mixed up. Yes, gold and silver are stores of value. They are representations of wealth and have been for thousands of years. yes, you can find or excavate a gold coin from the ground that's been there for 1,000, 2,000 years, and it will allow you to exchange that for real wealth. But it's not real wealth. It's just a store of value. But he seems to think that one should put all their wealth into Bitcoin, or for that matter, into gold. And I don't think that's true, because there's more things to wealth than just money. There's like how you bring up your children, how you educate them, how you provide them with the intellectual wherewithal, languages, if you can speak different language. You've got real estate, you've got farmland. I mean, you've got a lot of other things that are really wealth. And wealth is also, in my opinion, being able to create value yourself every day, to create some kind of benefit to society. And yes, money doesn't really create any benefit. It helps to create benefit. And that's why it's a dead commodity. And that's why gold is money. And yeah, he talks about that if you have wealth, let's say a building or some land or a stock portfolio even, that government will come and take it, and that they can't take your Bitcoin. But if we come to a world where things are like that, will Bitcoin really be worth anything? So that's what I have to say about that. I'm sure I'm going to get a lot of comments in the comment section from the crypto space. But yeah, we need to talk about these things though, because this is a current debate, important debate. So now let's look at where the markets are this morning. It's almost 9 a.m. London time. We got gold at 1862. It's down about $8. Range has been 1872 to 1857. Silver did well yesterday. We got above 26 early in the day yesterday and even later in the day. But this morning it's down about 1.5% at 25.50. I'm not concerned with these short-term moves. I'm holding on and trying to add on to my stack of silver. The Dow is down 180, or just under 2/3%. The Dow future, S&P future is down 0.5% as well. NASDAQ 100 down 0.5%. Sterling is down 1/3% at 136.88. The euro is pretty steady, is up 1/8 versus the dollar at 121.80. Dollar is up 1/8 versus the yen at 103.63. And the dollar is up 1/4% versus the yuan at 6.48. Copper is down 1%. And WTI crude is down 1.5% at 52.29. I haven't really looked at the headlines or what's going on, why the markets are down. Sometimes the markets ebb and flow. That's what they do. So to finish off, the 10-year yield right now, it's at 110. Seems to be stuck around this level for the last few days. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide, and think about subscribing to the channel as well if you haven't. So I wish you all a great day. Take care. Bye.